Breaking news from the Fed, literally just seconds away. The market's slightly lower right now. Yields on the 10-year at fresh lows. Let's go to Steve Liesman with the
FOMC
latest.
meeting say that the majority likely warranted, leave interest rates unchanged for the rest of the year. The majority thought that the economic situation warranted leaving interest rates unchanged for the rest of the year. Several participants say the target range was close to the long-run neutral level, and several participants noting their view on the right target range could shift in either direction. Now, some, those expecting better growth, say the economy could warrant a rate hike later this year. So the majority says we're going to leave it unchanged, but some think it could warrant a rate hike later this year. There is no comment from any group, I would note, explicitly saying they expect to have to cut interest rates. A couple underscored that patients that are using or going to a patient regime should not limit policy moves when appropriate. Moving along here. Sorry, 1 second. Say the time is needed to assess if the weakness in the first quarter spills over into the second quarter, and there's uncertainty around trade, around Brexit, around spillovers from the weakness in Europe and in China. Participants generally expected slower growth due to that foreign growth problem, waning effects of fiscal stimulus, and less boost from fiscal policy than they originally expected. They expect a strong consumer overall for the rest of the year, but continued softness in the housing sector was a concern. Most likely outcome, they said, sustained expansion, strong labor market, and inflation at trend. But several were concerned about the low level of the yield curve, which was not quite flat, but they were concerned about it. Some noted other factors like the low level of term premia. And finally, concerns about increase in debt issuance and high levels of corporate debt they said warranted monitoring.